One of my big investing theses is over the next 5 to 10 years is going to be physical AI. And I'm trying to get out ahead of it now because never yet in my investing career have I been super early to an Nvidia or Apple or Amazon. I've caught the wave on a lot of these things, but I'm really trying to get early to something big. And obviously, we've seen the big AI build out already with semiconductors, chip manufacturers. We're getting pullbacks in some of those areas now to be expected. But Robostrategy, ticker BOT, trading on the NASDAQ, is essentially a publicly traded venture style fund that is focused on private companies in robotics, specifically humanoid robotics and physical AI companies. The most important distinction here is that RoboStrategy's recent stock market cap has been roughly around $500 million, dollars, with a number of names that we're going to highlight that are in this fund. And we have the potential here to be super early to the next, let's say, OpenAI or the next Anthropic before they go public. And it's one of my big investments that I'm making right now is physical AI. It's not the only big play I'm making in terms of robo strategy, but it is right now my biggest position in the physical AI trade specifically. And I've been dollar cost averaging. Today, the stock is up over 20% in a blood red market. So we'll talk about some of the reasons why I like this fund, who's investing in it. I've listened to now hours of Andrew Kang, the person who created this fund, talk about it. So we'll get into all of that in the video, guys. Do me a solid, though. Hit that like button. Drop your comments. I do want more and more people to see these videos because we're um, putting people on a bunch of plays that I think not a lot of people are really paying attention to. And you can see Robo Strategy today gapped up in a massive way. Really started late afternoon today. The stock was trading earlier this morning under 24 bucks right after market open, and it ended the day now and after hours up over $30. And so we're in right now at an average cost of 27.88. I'm ready to dollar cost average down um, or up. I'm ready to just get into this trade, and we're slowly building out a bigger position. You could see here we're up a little bit, up over 10% right now on the trade. But this is going to be a longer term play. And I want to get as many shares as I can before the full robotics move happens. And so Andrew Kang in July invested approximately about 10 million. This is the guy behind the fund. 10 million of his own capital into bot. And he bought it at $36.71, purchasing 272,000 shares, $10 million worth. 272,000 shares. He's the person behind the fund buying above the average price today. So that's a big bout of confidence. Institutional investors, many of them got into and participated in the financing of the fund. RoboStrategy has not publicly disclosed those names, but the company has completed several private share issuances since June, showing that a lot of big capital is interested in getting in here. Kang is also significant insider holder beyond that single purchase. Public filings indicate that he controls a substantial position through a combination of direct and indirect ownership. RoboStrategy is led by Kang and fellow Mechanism Capital executive Mark Weinstein, giving the fund access to the venture capital network behind many emerging AI and robotics companies. Um, putting this through one of the LLMs, the current RoboStrategy portfolio as of June 30th, as of late last month. You guys can see some of the big names here. Figure AI is one of the big names. Standard Bots, this is industrial automation and robotic arms. Figure AI is general purpose humanoid robots. uh, Dyna Robotics, general purpose robotic intelligence. You've got Apptronic, Dexmate. You can see all the different focus areas. AI powered robotic welding, physical AI industrial platform, robotics infrastructure and motion systems. A company called REC, humanoid robot combat and entertainment. So a lot of these make up small percentages, but the big ones that make up, over 10%, you've got 5 of them right here. Standard Bots, Figure AI, Dino Robotics, Apptronic, and Dexmate, all making up a really big chunk of the portfolio. You start to look here, 35%, okay, plus 30, that's 65, plus another 15, that's 80, 90% are in these 5 names here at the top. Now, things can shift around and change, right? But the ones that I think are the most interesting, Figure AI is probably up there. Figure AI is backed by NVIDIA, Microsoft, Jeff Bezos, and OpenAI. Apptronic, which is a big name in here, in the fund, recently raised capital from Google, Mercedes-Benz, B Capital, Qatar Investment Authority, Dino Robotics. This is another big name, backed by NVIDIA's venture arm, Amazon's Industrial Innovation Fund, Salesforce Ventures, Samsung. Standard Bots has received some big backing from Samsung and Amazon as well. So these companies are not necessarily purchasing shares of Bot. What they're doing is investing alongside Robostrategy in many of the same private robotics companies. So you can also, get exposure through the hyperscalers, but Robostrategy has even taken the lead in some of these rounds. It helped lead Dino Robotics, for example, 120 million Series A, and led Standard Bots 200 million Series C funding, which valued Standard Bots at approximately 1 billion. So some of these companies, they're very small today. And I think, there's a lot of risk here that comes with investing in something like BOT, but I'm willing to take that risk. My thinking is, it's got an AUM today of around 500 million. Let's see. Yeah, 506 million today. I mean, what if the market cap of this fund reaches the tens of billions and, dare I say, 100 billion? I mean, that's crazy to think about, right? But you go through some of these names. Figure AI announced, as we mentioned, a big Series C financing of more than $1 billion in September. Figure's holding is the holding most capable of materially transforming Bot through valuation appreciation. For example, approximately 39 billion to 100 billion would be a 2.5 increase. 39 billion to 500 billion. And Figure's position is at approximately 37 million right now. If Robostrategy maintained the same economic exposure without dilution, its 37 million Figure position could theoretically rise substantially. One company alone would not take Bot anywhere close to $1 billion, though, because my goal is maybe this fund get to 100 billion. I know that's crazy, but something like a 470x, by the way. Just saying, right? But it's going to need a lot of these big winners to get to those valuations. But even if it got to 10 billion AUM, I mean, you're going to need Apptronic, you're going to need Standard Bots, you're going to need a lot of these big names to be winners, right? So I kind of prompted the AI, could Robostrategy reach 100 billion? It is mathematically possible, but it would require Robostrategy to become something far larger than its current portfolio. From its latest reported net assets of approximately 249 million, reaching 100 billion would require roughly a 402% increase. From a roughly 521 million stock market capitalization, which is where it is now, reaching $100 billion market cap is about 192%, 192x increase. So 100 billion AUM, that's the value of investments owned. 100 billion market cap, value investors assigned to Bot's publicly traded shares. A closed-end fund can trade above or below NAV but a persistent extreme premium becomes increasingly difficult to sustain as the fund becomes much larger. So they kind of go through the growth that it would have, which is absolutely absurd, right? I mean, these are just outlandish numbers. I did it on purpose. But the core growth mechanism, issuing shares above the NAV. Robostrategy described its model as raise, invest, scale, expand. The fund intends to issue bought shares when they trade at a premium to NAV and use the proceeds to acquire additional private robotics investments. For example, assume bot has a NAV per share of 10, market price of 25. If it issues one new share at 25, it receives 25 in cash while only adding one additional share to the denominator. That issuance can increase NAV per share for existing holders, provided transaction costs are controlled and the capital is deployed intelligently. This is the same broad concept behind um, accretive capital issuance used by certain publicly traded treasury companies and closed-ended vehicles. Robostrategies filed for a committed equity facility of up to $2 billion, although that facility is subject to SEC effectiveness, market conditions, and other limitations. The premium is not just a valuation observation. It's potentially the fuel for the business model. A strong premium allows strategy to raise more money per share issued, increase the NAV, add assets, acquire larger stakes in these private companies. But again, if bot falls to NAV or below NAV, this flywheel weakens dramatically. Issuing shares below NAV generally destroys value for existing shareholders unless there is an unusually compelling reason. So it kind of outlined the whole phases that it would have to go to, right? Um, and I won't bore you with all of this, but it's interesting to kind of do this. And when you're prompting on certain stocks that you like or whatever, in terms of valuation, right? What must go right here, though? Robotics must become a massive asset class, which I think it will be. Humanoid and physical AI cannot remain niche. It would need to become comparable to cloud computing, smartphones, semiconductors, software, internet platforms, etc. The bull thesis is that robotics eventually becomes a multi-trillion-dollar economic layer affecting manufacturing, logistics, healthcare, defense, construction, and domestic labor. So I have this thesis already. That's why I'm invested, right? Like if you don't have this thesis, then don't listen to what I'm saying. Um, Robostrategy must maintain exclusive access. Bot's appeal depends on offering public investors exposure they cannot easily obtain elsewhere. That advantage could decline if Figure goes public, Aptronic goes public, more private markets ETF launch, brokerages begin offering private company shares. RoboStrategy must continually add scarce private investments, not rely indefinitely on its original holdings. So they got to be fluid. It must issue capital accretively. The company cannot reach 100 billion by merely waiting for current positions to appreciate. It must repeatedly raise capital at prices above NAV and invest it in attractive valuations. Portfolio marks must be credible. Most positions are level 3 assets valued using significant unobservable inputs. That means their valuations are inherently subjective. RoboStrategy itself acknowledges that risk. For institutional capital to arrive, investors will need confidence in independent valuation procedures, audited financial statements, all these sort of things, right? The fund needs liquidity events. Paper valuation gains are not enough forever. It eventually needs IPOs, acquisitions, secondary sales, dividends or distributions, realized gains. Successful exits would validate the NAV and allow capital to be recycled. The biggest risk is the premium to NAV compression. So this is the most immediate risk. So at June 30th, the NAV was 10.51 per share, while bot's market price is traded substantially above that level. Someone buying bot at 25 is not only buying the portfolio, they're paying more than twice the reported NAV for future access, essentially, right? So right now, concentration is a little bit of a risk too. 90% of the NAV is concentrated in 5 companies, but we're still very early to robotics. That's the thing. There's going to be a lot of bigger, more vast companies, I think, over the next, several years. So there's definitely risk, right? And I think the things that we need to go right, I really side with. Physical AI becomes one of the world's dominant investment themes. Bot remains primary public proxy. It repeatedly issues shares at premiums. I'm going to continue to listen to Andrew Kang speak whenever I can as well. That's another thing that I think is just super important. Following the main page as well. So if we go over to Robostrategy here and we go to their link tree, they've got a website and a newsletter. I signed up to their newsletter, so I get all their reports. I'd highly encourage to do that. But they give you the entire portfolio. They've got a nice little investors resources guide here, any kind of news, etc. So let me know your guys' thoughts. We'll be breaking this down a lot more, but it had a great day today, so I figured, you know what, good day to make a video. It's catching some waves on the NASDAQ, and yeah, we'll be back with much, much more. Make sure you guys do subscribe. Appreciate you all for watching.